let's get into when people are going to be foreclosed on. Bank of America and Chase could restart mortgage foreclosures as early as July. Wells Fargo is waiting until 2022. So it's been over a year since lenders and the federal government stepped in to help Americans stay in their homes amid the global health and economic crisis caused by the COVID-19 pandemic. Many Americans still need that support. About 2.1 million homeowners are still on forbearance plans that suspend their mortgage payments, according to the Mortgage Bankers Association. And about 1.8 million families are not in forbearance, but already at least 90 days delinquent in paying their mortgages. The latest data from Black Knight, which monitors mortgage data. So 1.8 million people are not in forbearance, but late. 2.1 million homeowners are still in forbearance with suspended mortgages. Predictions are running short on time. Joe Biden extends a federal foreclosure moratorium earlier this year, but that will expire June 30th, 2021. Do you, real quick, Dan, do you think that's going to be extended again or no?
Well, just about that and the rental moratorium or the eviction moratorium. I don't think either are going to be extended. I think at some point we have to force ourselves back into reality and just deal. There's a flood of something coming, and it may be bad. It may be a rough time, but we got to get through it. We can't just. Well, I hate to say it that way. I really do, but we got to push through it.
You sound super normal, and I don't think politicians are normal. So in my opinion, it's going to be extended again.
I would say no, it's not. But I don't think it is. It's also, we're only in the beginning of the month, so it's possible because the eviction ban is what was it, the 15th?
Yeah. I think they're going to look at the jobs numbers and say, hey, the jobs numbers aren't totally full employment yet, so we'll extend it one more time. For those, maybe they'll, instead of extending it for everyone, they're going to extend it for those people that don't have a job yet. Right? Maybe something
or something. Maybe there's a caveat to it. Let me see. I was just going to look at federal unemployment rate, but I'm having trouble typing.
Look that up. I'll cover some of these articles. So Wells Fargo, they plan to extend the foreclosure protections beyond the current federal moratorium. Here's a quote from them. They said, for the loans that we own, we've extended the moratoriums on foreclosures and evictions until the end of the year. That's CEO Charles Scharf said Wednesday at a hearing. Additionally, Wells Fargo supports a Consumer Financial Protection Bureau proposals rule that would prevent lenders from starting foreclosure proceedings until 2022. Bank of America said in the hearing that that the bank's suppression of all foreclosures will run through the end of the quarter, which ends June 30th. He added that a number of Bank of America customers who are still in forbearance and potentially at risk of falling delinquent is down by 90%. Here's a quote from him. He said, the good news is the amount of deferrals is way down and that most of the clients have become current. Irrespective of that deadline passing, we'll continue to work with the clients that we have to help them. JP Morgan Chase. They did not comment on when they plan to resume, but said that 90% of Chase customers had also exited forbearance programs. Let's see. Morgan Stanley CEO Gorman said that his financial institution does not operate on consumer mortgages. Citi CEO Jane and Goldman Sachs and Solomon were not addressed, just so you guys know. So somewhat interesting. We may see some foreclosures actually hitting the market. The only ones I've seen so far have been like local banks and such that have been through the foreclosure process. There were some that had to be re-foreclosed on, but I have not seen a lot of foreclosures in our market. Every now and then I see one. There's one that's a short sale with that's a not bank approved short sale. It's just sitting there and the bank will not approve it. And I don't know what's going to happen. So Mario Flores and Matthew Clinton, producer Matt says peeling the Band-Aid can be really painful, but inevitable, right? Yeah, but the government tends to do that stuff slowly.
Yeah, that's just why.
100% Dan, pull the Band-Aid off.
Yeah.
Adam Johnson said, did you see the new home construction numbers per decade over the past 100 years? Yes, I did. It's way down.
So anyway, I can't find current. Usually there's a stat. It's really easy to search, but maybe I'm searching it wrong or differently, because I'm getting old, so maybe I'm forgetting how to do these things. but we have.
You're getting old.
I'm getting old. I'm forgetting.
Says producer Matt. Okay, boomer.
I know he likes to do the okay boomer thing, but there was no state currently above. They're about 8.5%. So the higher ones. But when you look at the historical high, some went back to 83 and all this stuff, and a lot were a year ago.
4.4.
There you go, 4.4. So that's what I was going to say. It's under 5, because I know we talked about it. It was at 4.8 or something like that. So it's even less than that. And no state, every single state has at least half or more than half got their workforce back out there and working again. So again, at some point, we got to go, look, people are back out there and working. And maybe you look into incentives or ways to help companies that aren't bringing people back. Bring them back. How do you help there? You know what I mean? Instead of taxing rich people. Oh,
Adam Johnson says, until we have an increase in new construction by 2 to 3 times what we're building, existing home prices will continue to increase, or unless rates start to go up again, right? I think we're going to see a little bit of home price gains slow as rates start to tick up. I think that's going to be the article. And I think because we're at 4.4% of unemployment, they consider 4% to be full employment. And so that's, with people, natural job changes coming in and out and that kind of stuff. It's usually around 4% is full employment. So if we're sitting at 4%, that's nearly full employment. So rates will have to tick up, or inflation will start to happen, because there will be more orders for products. And so people will have to increase the price of those products due to the unavailability of those products. So Adam Johnson says, nope. Now you sound like a news agency. Well, we, the bearded men of real estate network news. Yeah.
We actually are a news agency.
He said home price slow is still a gain. Yes, that's what I'm saying, Adam.
Exactly. We're saying the same thing.
Continue to increase, but they're not going to massively increase at the same rate that they're.
Yes. And what Ray is saying, he's actually taking a shot at the news agencies that say home price gains slow, as it's kind of controversial or kind of clickbaity, when it's really like, wait, no, my house is still worth more than yesterday, but it's slower than yesterday. Okay, that's fine.
Yeah, that's exactly what's happening.
It's really interesting that they write. Yeah. So, and Ray says that pretty much every week. We're going to start seeing these articles. Home price gains slow again, because before the Rona, it was weekly. It was a couple times.
It's going to be
articles.
It's going to be a big celebration when I finally get to read that article again.